Now we're going to go to Tim Ord. How are you?
Good. On again.
Well, it's great to have you. I bet you got a ton to talk about.
All right. Yeah, we could start on chart one there. I guess I'd be doing the charts.
Yes.
Let me get all right. This is a daily SPY, and we're going up against a kind of a resistance area. Basically, the highs of February. We're not too far away. I thought we might pull back first, back to 570, or we rally to 610. I actually got volume studies. If you notice, the market's kind of rallying over the last couple of days. Today's not over yet. But the last 2 days hit higher high, and the volume kind of dropped off. But I got in the shaded blue areas here. I got the trend and tick closes, and anything on the trend close above 1.2 is bullish because it shows panic. Panic in the market is actually bullish, and tick closes, preferably below minus 200, are bullish. They didn't quite get to bullish levels, but I put them there anyhow. Here's a 210, but a lot of times that builds energy in the market. Whenever you got panic in the market, you're going into a low. If you don't have panic, the market will keep going down until it does get panic. And panic can actually happen in an uptrend, downtrend, and kind of over the last, since April, the market, every pullback has put a little bit of panic in the market. And even in this trading range here going sideways right here, we have actually three different trend readings above 1.2 in that sideways move. So that was bullish. I thought we might still pull back to 570, but it appears we're going to go back up since today is up, close to 0.5%. We may try for that 610 area. Here's what I think is forming on the bigger pattern. This pattern is it's a weekly pattern. Going back to actually last year, November of last year, and it's a great big head and shoulders bottom. This decline was going into the April low, had a sign of strength off that low, and now we're into a trading range, my opinion, where you got 570 is the bottom of the trading range and 610 at the top, and we're going to probably bang around in this trading range. Probably until August. The reason why I say that...
So, Tim, I just want to say, so we're looking at a trading range that has been going on essentially from November. Even though we had that huge spike to the bottom, the majority of price movement has been within the trading range that you've got in this highlighted kind of pinkish area between 570 and 610, correct?
Yeah, 610, right.
Right.
And the whole thing is this pattern over here from November until February, March is the left shoulder. We're in the right shoulder right now. That may extend to August. The reason why I say that is because a lot of times there's symmetry in these head and shoulders patterns. So if the left shoulder took 3 months, the right shoulder will take 3 months, give or take a week or so. And so I'm thinking we're going to bang around in here. Even though the market's kind of going up here, we're going to find resistance back in this area. And I thought we may pull back first. It's kind of hard to say. I was long. I got out of my long position, made a small profit. But we're probably going to hit 610, stop. The only reason why I'm stopped, this is the summer. Summer, we're into what they call the summer doldrums. And usually you don't get major moves. You can, but you usually don't get major moves in the summertime. Those major moves start in August, September, May as late as October. So I think we're probably going to go up to 5 or 610 area in that vicinity, find resistance. We don't really have a sign of strength going on in here. As last month, the month of May, broke above the previous, or last week, we broke above the previous 2 weeks ago, which was the high on actually 8% lighter volume. That implies a false breakout to the downside. You can still go higher, but ultimately you usually come back down. So I'm thinking, even though we may get a 610, we're not going to break through that high of six. We'll get to it, but I don't think we'll break above it. Because to break above it, you need a sign of strength, and a sign of strength is basically a high volume push through those highs. So if you break above a previous high in a lighter volume, a lot of times they don't hold. They may rally a little bit, but they usually fall back. And so on this weekly time frame here, since this day right here came on 8% at lighter volume, it's probably a false breakout. So I'm not trading alongside here because it doesn't really have strength to really go far other than 610. And I think we come back down to support, which is basically the previous lows, which is around that 570, give or take. That probably finds support. And one key to find that support is when the ticks and trend in this vicinity start to go up. In other words, trend closes of 1.2 or higher, and downtick readings of minus 200 or lower. And usually those type of trend readings and tick closes show panic, and panic a lot of times comes as support. So that's what I'll be looking for on this next pullback. When it'll pull back, I don't know. Next week's expiration week, a lot of times that has a bullish bias. So don't know. It's just kind of not the time to really trade. The best trades come when you get panic, just like off this panic low. But it's kind of being careful right now. Don't see any great trade setups. Let's flip to the monthly chart. This is a monthly SPY. If you notice here's the VIX on the bottom window. It's below 17. And if you notice, the VIX is actually going lower with the market going higher. That's usually kind of a bullish sign. Yeah, because if the market's going up and the VIX going up, that's a bearish sign. But so far, the VIX is going down, even though we don't have a lot of volume probably this month. The month is not even started yet, but we're probably going to find that 610 area. You can kind of see this head and shoulders pattern a little bit better. I put on a cycle type thing going on here.
Yeah, I see that. And that cycle goes to August, right?
Yeah, right to August. So
okay, we've got a lot to talk about. Let me just say, folks, this is the newsletter, and we're going to be back in a moment. There's a lot to discuss, and it's quite exciting. The Dow is up 60, S&P of 24. We'll be right back with Tim Ward. This is Basil Chapman sitting here for Tommy O'Brien in the Tom. Hi, folks, we're back. Basil Chapman speaking with Ward and Tim. You're looking at the monthly chart of the SPY. Would you please continue?
Yeah, okay. I wanted to talk about it. I got this RR thing right there it's actually railroad. And you see this big down day, and you see this big volume.
Yes.
If you notice, this is exactly the opposite here. You got big up volume, and you got this candles pretty close to equal to this down candle.
Yes.
So it's like a railroad tracks.
I got it. Yes.
Right. So this is energy to the downside with big volume. This is energy to the upside, almost equal to the down volume going up. They call them railroad tracks, and they come at major turns in the market. So the bottom is in as far as April. We're not going to go back down and test that. So once you see a railroad track off of a bottom, that predicts the market's going to go higher. It doesn't say when, but that predicts the bottom's in. So this
Tim, am I correct? It does one thing particularly, and that is to decipher and say there's a climactic volume price reversal, but then it doesn't tell you time or price after that, but it does give you that ictus, that turn right there at that moment.
Right.
Good.
So now if this volume was half of what it was going down, then that's not a good sign. So they got to be equal or close to equal.
Got it.
So the down volume or the up volume has pretty close to be equal to the down volume, and the up candle pretty close has to be equal to the down candle. There's variations, but that's how you can tell. So anyhow, so they had just as much up strength to the down strength, and that reverses the whole thing. They call them railroad tracks. Actually, Joe DiNapoli invented that, and it works pretty well. It works on stocks and everything. So, but anyhow, that's the end of that. So bull market started. We're in a consolidation. We're in the summer doldrums. The summer doldrums may last all the way into August, give or take a week either side of that. But the bigger trend's up. This is a Head and Shoulders bottom, which has an upside target of 740, which is about 20% higher than where we are right now. So
Good.
that's that. Let's look at the gold market.
Okay.
You got a lot of interest in the gold market. This is the top window. Where's my? Oh, there it is. All right, top window is a bullish percent index for the gold miners index. What this measures is the bullish percent index measures the percentage of stocks that are on point and figure buy signals. So for the gold miners index, there's 96.43 or 42% of the stocks in that in the gold miners index are on, no, there's almost 100% of the stocks in the gold miners index are on buy signals. Anything above 95, which is, there's a time, here's another time, here's a time. The current's 96.43 or 42, wherever it is, and you're right there. And all those times came at least consolidations.
Okay.
So, and we're in that time frame right now, so I'm thinking we're going to get into a consolidation. This is on a monthly this is I don't know what this is. It could be a daily.
Well,
but
it
anyhow,
looks like a weekly, doesn't it? I think it looks like a weekly. Or maybe not.
I don't see where.
Yeah, it's not the daily. I think it's a weekly chart, maybe a monthly chart.
All right, but anyhow, this is GDX, and so you can see you get consolidations when you get that many. That's the reason why I told Tom and I talked about this chart probably about a year ago. Says you don't want to see anything above 95% of the gold miners index on a buy signal, because usually you get big consolidations. So let's look at the shorter term picture. What's going on? And this is the GDX, or actually the bottom window is the my drawing tool went away here. The bottom window.
The very bottom one is the GLD, right? You got the GDX in the middle and the GLD at the bottom. You've gone to the next chart. Sorry, that's why I was confused. Good.
Right.
Okay, we've got that. GDX at the top. Here we go.
All right, so GDX, the GDX GLD ratio. Next one is GDX advanced decline. Cumulative, next window up is the GDX up-down volume, and the top window is just the GDX. And what I did is put a Bollinger Band on all those. There, you can see it over here.
Yes.
But anyhow, I put a Bollinger Band on all four of those indexes. When you get three of the four indexes above the upper Bollinger Band, in other words, it's stretched past too much of the average, and usually you get a consolidation. These are not long-term topping patterns, but they're usually short-term. So, but anyhow, over first part of June here, all four of them got above the upper Bollinger Band. And a lot of times, that's why all those blue lines across the chart going back for about a year.
And now they're all below. They're all below the Bollinger Bands.
Well, you get a close above the upper Bollinger Band as your signal. So now they're in the consolidation phase. So I think we've made a short-term top of not of any magnitude, but at least a short-term top, because the market got stretched too past the norm, and the norm is the mid-Bollinger Band. So it got too far away from mid-Bollinger Band. Right. Normally you start to pull back. So that's what's happening here. So where do we go? I think this is a double top. I got out the April high. We went back up and tested it here just a few days ago. And so I'm thinking we're going to pull back down to the 39 area. The reason why I call it 39 or 3940 area is where the previous breakout occurred. So
you're talking about the GDX. The GDX,
yeah, I'm talking about
which
the
is
GDX.
Trading at 51 right now. You think it goes down to the low 40s, 39 area. Yeah.
Yeah, 39. It's got quite a bit of support there. And also you got, this is a monthly chart right here, as RSI above 70, and we're at 72. Previous times you get up there, I marked them back there. You can see what happened. And also you got, if you get 80% above the upper Bollinger Band, which we did in April, up around that 50 area, A lot of times the market's extended, and if you notice, all those previous times you got a double top, just like we got now.
Right.
So we went up and tested that area. So I'm thinking just a pullback. There's a lot of people bullish here, and this is probably not the time to really get into a lot of positions. A lot of things will still go up, but if you're 50, we're looking at least a 20% pullback here or thereabouts, and so I'd wait for the pullback, and also this may run with the market, far as the equity market may kind of be in a trading range until August or so. The gold issues may do something similar. In other words, pull back and then probably hit a bottom, August, September, and start the next rally up. But gold long term is fine. But I think over the next several weeks, I think you're looking for a consolidation, especially with you got 95 bullish percent index above 95%. All of those previous times, you at least got a consolidation. So there's quite a bit of evidence that the market and the gold stocks have really done well over here over the last year. So they need a rest to build energy for the next move higher. So bullish, but short-term consolidation.
You did a fabulous summation of all your the analysis that you've done. We appreciate it, folks. You can you can check out Tim. What's the Oracle report? What the name is?
Just Google Tim Ord, and you'll find
Tim
it.
Ord, and you'll get in touch with him. That's fantastic. Thank you so much, Tim. Look forward to what is today.